We're breaking down gold right now. I haven't done one of these videos in a while, so I thought let's go ahead and do it. Let me show you guys what I'm seeing on gold right now. So I'm going to go ahead and put my annotations on real quick. I've got a few things marked up on this time frame. You can see first of all that we have a massive down close candle. You have the very high of that down close candle, and I've also marked up these equal highs or relative equal highs. What am I literally saying here? Just first of all, on this daily time frame, I'm saying that price has traded down into this down close candle. It's mitigated that down close candle, and now I'm expecting some bullish price action whenever price dips into this down close candle. The really good thing is that we have relative equal highs here too. These will eventually be taken out, and there's going to be buy stops up here, all kinds of liquidity up here. So it's coming in at 2072-ish, but I'm believing that price to get to 3,000 or even higher than that. This is just what the higher time frames are telling me. We're telling me that we are bullish. We've been bullish. As you can see, gold has been rising, since forever. All right, it's been rising. I'm bullish long term on gold anyway. And so this is a very, very important time right now, and I'm going to show you why. Just bear this in mind. First of all, we have relative equal highs. This would be a massive drawn price. There's going to be buy stops up here that are willing to get taken. Right now, you have to think about what are retail concept traders thinking at this time. They're probably thinking that this is a very strong zone, and so when price gets back up here, they're going to be looking to sell. I see it differently to that. I don't believe that when price gets up here, it's going to be a very strong sell again. My opinion of price at that time would be that we're up here to run out the liquidity above this high. Not necessarily to respond off of this level and to start coming lower, but to take out these highs. All I want to see now is I want to see order flow going up to the upside. I want to see order flow switching to the upside. So now let's go down to a lower time frame to find out what's going on here. Why have I marked up these candlesticks here? These are the down candles. I've marked up all of these just to show you that none of these lows were taken out. This low wasn't taken out with this push down. That one wasn't taken out with that push down. So what am I saying here? I'm saying that lows are being protected right now. And so whenever you see lows being protected, it means that price is bullish. And not only that, these down close candles are mitigating each other. So I'm going to bring up my arrow tool right now. So the very high of this up close candle, we traded back down into it. We've mitigated at this level, and then we pushed higher. You can see this one right here too. You can see we've come to it a few times, and as you know, they can mitigate for as long as they want. They've mitigated it a few times, and we've pushed higher. These down close candles, once again, I've marked up this one too. We've taken out the high of that up close candle, we've traded back down to it, and then we pushed up again. The difference between that one and this one is that this one broke a high and it came back. This one was doing lots of mitigation before it broke the high. So in other words, whenever price returns back down to one of these down close candles, price looks to be bullish. And so in other words, you should align up with that and stay within that bullish mindset. Whenever you see price mitigating down close candles, not violating the low of them, but just coming down to mitigate and then breaking up higher again, that is telling you that order flows to the upside. And so whenever price returns back down to one of these institutional candles, so in this case, these are down close candles, you should be looking to get bullish. Now, what I'm going to do is I'm going to go ahead and mark this one up too, right here. That's the high of that candle. And I'm going to zoom out, as you can see. And so now what's happened over here? What's happened over here? Price is traded back down into that down close candle over here. This whole push down from this very high to this very low. This is when they ran out all this liquidity. Okay, they ran out all that liquidity to the left, and then they pushed up higher. Price is traded back down into it, and have we taken out the low? You can see that we have not taken out the low. Because we have not done that, this is why you still need to be of the mindset that price is going to go up to the upside. With that in mind, so if I'm going to be staying bullish, if I've got a drawn price, which is going to be these relative equal highs, and by the way, you don't have to hold it up here. It's from this low to this high, we're talking about 2.8 thousand pips. You don't have to hold it to that high. You could be looking to take out this high over here, that high. Any of these highs could be your target, and I'm not saying I'm holding a full position to this level. Take liquidity, take your partials, look about getting another entry on another day, and you go again. Even if you want to do this in your demo account, you can go ahead and do this in your demo account. No one should be taking what I'm saying as gold. This is just my opinion. I'm comfortable losing in this scenario, just letting you guys know. And this is not to say that you guys should go and take it. And I'm going to be very clear. I want you guys to watch price. And if you come to your own conclusion about what you believe is going to happen with gold, then you can do what you want with that. Cool. So look at that. We've not violated the low. So I'm still thinking price is protecting the lows. And we're trading within this down close candle. I'm looking for price to get bullish in here. And so this is when we drop down to the lower time frame now. So now we are on the 1 hour time frame. We're currently looking at this very portion of price action right here. And I've marked up my down close and my up close candle right now. I want to see order flow switching on this time frame too. So when price gets into my point of interest, so this whole thing here would be my point of interest. This is when I look for order flow to switch on a lower time frame. When I say a lower time frame, I'm just referring to a time frame that's lower than, you know, what I'm seeing on a daily time frame. The reason I'm on a 1 hour time frame is just because I can show you the institutional candles a lot cleaner right now, because it's just literally one candlestick. So what do we have here? We have a push beneath this low. Okay, we have a push beneath this low. We run out that liquidity. This is that short-term high that produced this move down to run out this liquidity. So I'm going to be looking for price to take out that high. We trade just above it here. To me, like I said previously, this is still us taking out the high, but you can see we fully take out the high anyway. Then we start to violate these highs. Okay, so we're in my point of interest. We're violating highs and we produce a down close candle. On this time frame, this is where you are looking to get bullish. So when price traded above these highs and we traded back to it, this is when you're looking for some kind of bullish activity, some kind of bullishness to take place. And as you can see, we traded down into it. We've run this low over here. We traded just beneath it down here. We're trading within this down close candle. This is where I'm looking for price to get bullish and go long. And all I want to see is this. The high that it just created, can we go forth and violate this high again? Okay, this up close candle. Because if we do violate this high again, this is the up close candle. You can see this is the very low of the up close candle. This is the very high. If we can trade above this high right here, this will give me a bullish sign, and it will let me know that when price returns back down to this down close candle that mitigated this one, I should be looking to get long. And then I will attack all of these up close candles, because once we violated one high, that means highs are potentially no longer being protected. And so I'm going to be looking to target highs. And it doesn't mean that I'm going to hold one position fully to take out all these different highs. That's not what I'm talking about. I could take out liquidity, take partials, and then let the runners take out all the rest of these highs. Come back again the next day or the next week, look about another entry to then take it higher. So that's what I'll be looking about doing. What you guys could do is you can mark up your chart similar if you wanted to, and you can see whether we violate this high. Because if we violate this high over here, that would be a very good sign. And so it will just let you know that the low risk setup will come when price returns back down to this down close candle. But like I said, them targets, you know, the ultimate targets would be to run out this high over here, to run out these relative equal highs over here. That would be the ultimate target. But at the same time, you can target any of these highs, including this one over here right now, if you're in right now. I will switch bias if we take out this low. If we take out this down close candle, roughly about the low coming in at 1781-ish, then I'll be looking to take liquidity to the downside. But for now, I'm still bullish with respect to down close candles, and I want to see price take out some liquidity to the top side. But ideally, you're not meant to catch this one. You're not actually meant to catch this one over here. Don't start thinking you've missed a trade. Don't start trying to FOMO in here. There's no need to FOMO. Just literally wait for price to run liquidity, retrace back into a discounted price, look for a point of interest within that discounted price, and look to take it to the upside. Do this on your demo account. I'm gonna say it clear. I'm gonna say it nice and clear one more time. This is for your demo account. And once you've back tested this and you've learned this enough, then that's up to you whether you go live or not. But for me, this is what I'm looking to do. This is my opinion. And that's what it is. Thank you guys for watching the video. That's my analysis in gold. Peace.